You're listening to AI PRISM from Seoul Economic Daily.
It's Friday, May 15. I'd like to share some thoughts about Front Page Daily. We're diving into some recent Seoul Economic Daily reporting today to unpack this really massive contradiction currently gripping the South Korean economy.
Right. It's a fascinating tension to look at because on one hand, you have this historic global optimism.
Yeah, which is basically acting as a complete smokescreen for some pretty severe structural fractures at home.
The optimism definitely starts at the macro level, though. I mean, the 135-minute Beijing summit between President Trump and President Xi Jinping gave the Korean market exactly what it needed.
Right, the agreement to keep the Strait of Hormuz open.
Exactly. That ensures a stable flow of Middle Eastern oil, which is, the absolute lifeblood for Korea's heavy industries.
You can really see that geopolitical relief echoing across the major cable, those massive family-controlled conglomerates that dominate the economy.
Absolutely.
Because they're so heavily exposed to U.S.-China trade friction. A pause in hostility feels like this ultimate pressure release valve for them, a green light for growth.
It does, though if you consider Xi's really blunt warnings regarding Taiwan during that same summit, it feels a lot more like a temporary ceasefire than any kind of permanent geopolitical fix.
Right. But, the domestic market isn't exactly pricing in temporary, is it?
No, not at all. The KOSPI is just riding this massive wave of euphoria. It hit an all-time high of 7,981.41.
Which is up, 86% year to date?
Yeah, 86%. But the crazy part is that the mechanism driving this engine isn't just solid corporate fundamentals. It's bit two.
Right, bit two.
Yeah.
Meaning heavily leveraged retail trading. People taking out massive loans just to buy stocks. It's kind of like building a skyscraper on a foundation credit cards.
That's a great way to put it. And the brokerages facilitating all this bit two debt are the ones truly cashing in right now.
How much are we talking?
The debt velocity is so high that the top 10 brokerages posted a combined first quarter net profit of 4.33 trillion won. Yeah, which is about 2.97 billion US dollars. They are collecting so much in trading commissions from this leveraged volume that they're practically matching the profits of traditional commercial banks.
It's totally scrambling the financial hierarchy.
It really is.
Wait, I have to challenge this premise of market stability, though. Because we're looking at 50,000 Samsung electronics workers walking out on May 21st over transparency with their OPI bonuses, their excess profit sharing.
Yeah, that's a huge internal threat.
But is this strike really the true Achilles heel for foreign investors? With the KOSPI up 86% and seemingly immune to gravity right now thanks to all this retail leverage, are they actually going to jump ship over a domestic labor dispute?
Well, they will if it hits the physical silicon. Look at how Samsung is already reacting. They're initiating a warm down of their facilities.
Which is a controlled production slowdown.
Right. They have to proactively slow the fabs because if those highly sensitive semiconductor environments go completely offline without a controlled descent, the contamination is just catastrophic and permanent.
Okay, so the operational threat makes sense. It's not just a pause in work. It's a literal risk to the infrastructure itself.
Exactly. And the financial fallout would be massive. We're looking at potential direct and indirect losses of up to 100 trillion won.
Wow, so around 60 billion US dollars.
Yeah. And remember, Samsung Electronics makes up roughly 20% of the entire KOSPI. So a hit of that magnitude sends an earthquake straight into that highly leveraged Bit2 foundation we were just talking about.
So we have this immediate, highly volatile labor crisis threatening production. But if we shift focus to Hyundai Motor Group, their situation reveals a much deeper long-term vulnerability for Korean industry as a whole, right? Like they are losing their speed.
Yeah, that was probably the most striking takeaway from Chairman Chung's recent remarks. He was remarkably candid about their strategic realities.
He didn't just project absolute dominance.
Not at all. He actually admitted that Hyundai is trailing behind Tesla and Chinese EV makers in autonomous driving, noting that they're deliberately choosing to prioritize safety over speed to market.
Right, but he also acknowledged that Chinese competitors are simply moving much faster overall. And even with their Boston Dynamics Atlas humanoid robot, he openly framed their current phase as just trial and error.
It's a very measured, cautious approach. But it highlights this core tension. These industrial empires were built on rapid execution and unmatched manufacturing scale. And now they're being forced into a slower strategic posture right as global tech rivals are accelerating.
Which fundamentally changes the entire investment thesis.
It does. So for you listening and watching this historic market run, you really have to ask yourself a key question. Can Korea's industrial giants sustain these massive valuations while simultaneously battling domestic labor disruptions and structurally losing ground to faster global competitors?
That's today's AI PRISM, Front Page Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a One IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.